Hello everyone, today is the 16th of June. We are in the third trading day of the week, and in this video we are going to run you through the 5 most focused markets, which is the Euro US dollar, the gold, the Nasdaq, crude oil and Bitcoin. So let's start off with the Euro against the US dollar, but before that, just want to remind you that today is the FOMC trading day. Right, the FOMC statement and the FOMC press conference in the midnight at 2 a.m. and followed by 2:30 a.m. What we are going to expect for today is maybe some sort of a recovery from yesterday's losses or yesterday gain. Definitely before the release of the news or before the press conference, volatility should be pretty low, or the market is going to be more of a whipsaw. So doesn't mean that there is no trading opportunity. There will still be some opportunity to take, but we just have to make sure that we protect our trade as soon as possible. So of course, as usual, I'm going to talk about what has happened yesterday, what's going to happen going forward, and what is our trading plan, so you can make your own decision whether to take up our trading plan or not. So for the Euro against US dollar, yesterday we saw that the price went up a little bit more and found some sort of supply and came down, but obviously the selling is not that strong, so it went back up again, closing with a bullish candle with upper and lower shadows at the same time. So for today itself, well, if we look all the way back into the 4-hourly time frame, I'm just going to zoom out all the way. Obviously, we are still trading at a high of the entire consolidation of the range. Therefore, we are still expecting the price to pull back upwards even further while we look for a selling opportunity. So I guess the entire formation is very straightforward. Breakout of a previous rising channel as well. So we are definitely looking to sell. So very straightforward, our trading plan. Alright, in the 4-hourly time frame, we are going to draw a Fibonacci from the previous swing high to the swing low, and we are looking at the 61.8% level, where this level itself, there is obviously a supply zone for us to consider selling, because this is the neckline area. This is where price broke lower, and therefore we are waiting for a pullback into this region for us to look for a selling opportunity. So if we are going to sell somewhere right in this area, let's say about 1.2160, our stop loss can be placed right at the previous high, and then in terms of our profit targets, I think the first level we can see is somewhere back to this region, because yesterday has shown that there's a lot of buy and sell activities going on within this area. So this will be the very first level, and then of course followed by the previous low right here. But ultimately we want to hold our position and hopefully to take profit only as it reaches the bottom right here, which is a pretty important demand zone at this level. I mean, if you were to go and pull out a Fibonacci from this swing low to the swing high right here, all right, then we know that this is the 78.6% pullback level. So usually when the market goes into the 61.8 and into the 78.6% region between these two levels, there's always going to be some sort of buyers, some sort of support as well. So that will be our final target for today. But ultimately, I think there is a very good chance that we can see the price go all the way down to the equilibrium level right at the bottom here. We can see that this is the most important support for the Euro US dollar right now, and that is somewhere at 1.2 flat. Alright, so that is for the Euro US dollar. So moving on. So next we have the gold, and in the daily time frame, yesterday gold went down even further, but it is still within the equilibrium level. By the same time, we do understand that it has also broke out of this rising channel. So in a way, it is kind of neutral neither bearish or bullish. So I would say that it is still in the consolidation phase. If we go into the 4-hourly time frame right here, right now we are seeing support again right at the demand zone here, and price is being supported, kind of moving upwards again. So I believe that before the FOMC, there's a good chance for the gold to recover some of its losses from this week. So if we go to the 1-hourly time frame, now the good thing that we have right now is that it seems to be like trading at the bottom of a falling channel. So in a way, it is actually trading at the low of this entire range right here, as you can see. And then yesterday, as it went down, if we were to pull a Fibonacci from the swing low right here to the swing high, we saw that there's support right within the 61.8 and 78.6% pullback zone. And this morning it came down and found support again, and right now it has started to go up. So there is a very good chance we can see the gold continues to climb towards this resistance, and as such it might be able to pull back even further all the way into the supply zone right here at the top. So if we were to pull out a Fibonacci from the swing high to the swing low right here, that is still not even 61.8%, and therefore I think that there's a pretty good upside that we can actually try to go for a long from the bottom right here, and we can try to close it as it reaches the 61.8% level, or slightly before that within this supply zone will be pretty good for us to take profits. So going by our trading plan for today, before the FOMC, of course, in fact we have already went in for a buy at about 1,854. Well, stop loss wise, we set it at somewhere 80.6% pullback level right here. And then our targets, first level, of course, we always look for the resistance right here or slightly below, because if you go even to a smaller time frame, obviously this area right here could still provide a little bit of a supply. So which is why it's the first take profit level. Usually it's just for us to push our stop loss, or for us to consider going out. So the next target, of course, we want to look at the previous high right here at the neckline, and usually in this case, very good chance or very high chance you will be able to break higher, and then we'll ultimately aim for this level, all right, at 1,875 region, and last but not least, all the way back to the 1,888. All right, so that is for the gold. Very straightforward for today. And moving on, we have the Nasdaq. So Nasdaq came down quite a bit, well, because right now it is trading near, or rather at the top of the rising wedge. And of course, it is also pretty much at the top of a rising channel within the rising wedge. So obviously, just before the FOMC, there's going to be some sell-off, which I think I did mention as well. So where will it go towards? I think it can continue to go down and probably find some sort of support at this demand zone. We can always pull a Fibonacci, all right, from the previous swing low to the swing high. All right, looking at somewhere 61.8%, that will help us to be able to shift it slightly lower into this region. This is where the support is being seen. This is the previous high. So within this region itself, I think there will be a higher chance of demand and a higher chance for the price to rebound from there. So if you are looking to buy the Nasdaq, it's able to reach this level and we decide to go in to buy, so this will be somewhere at about 13,950 or 40. In terms of stop loss, we can't really put it too tight, because there's always a possibility it reaches the bottom of this rising channel. So it has to be quite huge in a way. But then if it goes up from here, obviously we can look back to this level at about 14,050, because that's the previous resistance, and going all the way up back to the top of this rising wedge All right, that's very possible. In fact, I think it's just going to be ranging within this area, just like it did when it reaches a new high right here. All right, the same thing might happen right here as well. All right, that is for your consideration. Of course, ultimately, if it's really able to go higher and break out of this rising wedge, like I mentioned in my previous video, I'm looking at a price all the way to about 14,500 before a major pullback or a major reversal where we see the price starts to push all the way down. All right, so that is for the Nasdaq. So moving on, we have the crude oil, WTI. So in the day chart, we can see that the oil market is really bullish. All right, continues to go up. Yesterday it went up quite a bit as well. You can see a very strong bullish candle right here, but not a very long one, to be honest. And right now it is back to the top of the rising channel, and well, it started to break higher. So yesterday itself, I guess we are still waiting for just one last wave of pullback, right? We are just waiting for one last wave of pullback. If we plot Fibonacci from the swing low to swing high, and if it's able to come down this, just pull back one more wave, then we'll be able to buy at the bottom of this rising channel at the same time at 61.8% and a very good demand zone right at the bottom here. But sometimes the market just prematurely go into a trend, and that's just how it is. But however, having said that, I think at the end of the day, we still want to be just patient, wait for the better price. I mean, a lot of times there's really pullback to the 61.8%, as you can see right here as well. All right, just to give you a few examples right here as well, right? So we just want to be patient and stick to our trading plan. But in any case, for today, I think as usual, nothing's going to change. We are still going to wait for a pullback again. And in this case, back into this region, all right, very straightforward. Again, if you pull a Fibonacci out right here, it is just somewhere right above or sitting at the top of the 61.8% pullback level. So I think I'll just move it down a little bit because we can kind of see that this is like a very small symmetrical triangle right here. So here's the breakout, and therefore we can shift it slightly lower to this level, which is at about 71.4 or 0.5 is where we can look for a buying opportunity again. If you were to buy right here somewhere at, I would say 71.47 or 5-ish, stop loss wise, always put it at somewhere 80.6 to be safe. And then in terms of the target, like I say, just keep on looking higher. I think we can go back to the previous high or the current high right here. And ultimately we are still aiming for the major equilibrium level at 76.6. But to give a more specific level, I think I will just pull out a rising channel here. Obviously, it's creating a new channel, which is going out of this previous channel. So if it's able to continue to go up, I think we can aim at somewhere at the top of this of the channel. Maybe to give a number easier to remember, 74 will be pretty good as well. Alright, so that's for the US oil, and last but not least, we have the Bitcoin. So the Bitcoin is finding difficulties trying to go higher as it right now has reached the top of the rising channel going out of this falling channel here. So since Sunday, we know that there's news, there's tweets from Elon Musk, positive stuff for the Bitcoin. Not going into the detail. Right now, it has already reached the top of the channel, and then it started to consolidate in a symmetrical formation, as you can see here. So it does seems that it's going to break out very soon, but in my opinion, I think it will go down first before it actually goes up. But in any case, that is what we want, because then we have a better price to buy. Alright, so it's going to be just like, I mean, it's possibly going to be just like this area right here, right, where we see that the price goes in a symmetrical consolidation, breaks lower, found support, and it goes up. So previously the price pulls back to somewhere about 30 point sorry, the 50% level. So for right now, from the swing low to the swing high, if it's able to come down back to somewhere to the bottom of the rising channel, it's going to be somewhere between 50% and the 61.8% region. So that's the area we want to look to buy again. And so we'll just put this region out for you to see. And so the plan is really straightforward. I'll just be waiting, right, for the price to reach this level. So it is somewhere about 38,000, right, to give a whole number, 30,000. Stop loss somewhere right here at about 35,006. And in terms of our targets, we'll go all the way back, right, all the way back to the high right here at about 40,500, and then to the top of the channel, which is about 42,600. And of course, last but not least, we do kind of expect it to go even higher into this region, right here at about 48,000. Very important supply zone for us. As you can see, this is where price broke lower and goes all the way down to the 50% pullback. So this is the most important supply zone for the Bitcoin. And so this is our final target. But however, mainly we want to start to take profit right at the top here. All right, because at the end of the day, we can still see very strong. We can still see a good supply zone at this region, right? So we still want to be careful when it reaches the top of the channel as well, which is right in the supply zone here. Alright, so in terms of the trading plan, I'll just leave it right here. Of course, when it reaches this level and you're really bullish on Bitcoin, or you think that it can go all the way up back into the 48,000 or even beyond, then you can just continue the whole portion of your position to take some partial profit. Alright, so that is all for today. Thank you so much for watching. If you like our video, do hit the like button, hit the subscribe button to stay updated on our trading plan. So see you again tomorrow. And reminder again, tonight is the FOMC, so be very careful with your trade. Close as soon as you make profit, or at least shift stop loss to protect your trades. See you again tomorrow.